Welcome back. I'm Pratap here. Today is 7th April 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. And it is a highly expensive training course, but we are providing complete free training. And all the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, click on the tab Posts to access the training lessons. Some of you might be seeing the tab Community. Click on that Community tab. Then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. I kept all the training lessons in this YouTube playlist. You just scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions mentioned at our Telegram channel. To access our Telegram channel, I provided the link that is available at this video description. So please join at our Telegram channel. At the Telegram channel, top of the window, you can find pinned messages. And one of the pinned messages are having all the training instructions. So please go through all the training instructions and learn this course according to those training instructions. Then only you will be a very good independent trader in the coming months time period. So please make use of this opportunity. Now let's get into our performance of a HLQ zone analysis. And before we look into the after we complete this performance of HLQ zone analysis, I will also look into NIFTY also. Why? Because NIFTY gave you trade opportunities today based on the new concepts I developed. Not based on the old supply demand zone concepts. Based on the new strategies I developed. Especially lesson 22, lower time frame zone origin to the higher time frame zone. And also pierced zone strategies. If you combine both the strategies, today you would have got a good trade in NIFTY. But I don't know how many of you really dare to go for a long trade when NIFTY is down so many points, more than 1,000 points, when prices reached here. If you really dare taking a long trade by using NeoStock's new strategies, pierced zone strategies as well as lower time frame zone origin. That means lesson 22 and lesson 28. Pierced zone strategies in lesson 28, right? Yeah. If you combine both, today we would have gained some points today. But otherwise, today is a very bearish day. It could have been a very bad day for many of the traders. But definitely today is a good day for HLQ zone traders, not in terms of getting the profit, but in terms of escaping the losses. How we escaped? Recently, 2 days back only we discussed. Let us go to our channel once again. Go to video section. Video section, I clicked on at our homepage, I clicked on these videos. In the video section, few days back, I think 4th we discussed, this is the most recent available. Before that, on 3rd April, we discussed the gap up and gap down scenarios. At 9:15, 1 minute candle, do you remember? As an intraday trader, we always avoiding morning 9:15 candle. We are planning our trades in 9:16. That means we don't keep any pre-market orders for intraday, mainly because of these gap up and gap downs. But imagine, some of you are already in the long trades. Maybe you have taken some swing trades or short-term trades. the long trades, you are holding the positions, so definitely today all those would have got a huge losses. I know it's a very bad day. And it won't happen every time. Once in a while, rarely you get. But that day people get huge losses. Today actually is a good day for all those who are holding short positions. Those who are holding the short positions in short-term trading or swing trading, probably they would have got a good profits today. See, market always provides opportunities on the both sides. At the same time, market is very risky on both sides. See, today it's a good opportunity earning huge profits for short traders who are already took positions and carrying the positions. But today is a very bad day on the reverse side. For all those who carried the positions on the long trades, is a bad day for them. But we high liquidity zones, I should not say it is a good day or bad day, but definitely one way it is good in terms of escaping, taking the trades, because all the HLQ zones listed by our software, they are gone in the morning 9:15 candle itself. To be honest, in the pre-market open itself, many of them are gone. So let's look into what happened to the HLQ zones first today. Now we are in the daily time frame. The first one is Bandhan Bank. See, market opened below the zone. It's gone completely. Next one is Coforge. See here, market opened below the zone. That means we won't plan any trades in this zone, even though you fine-tune. Now anyway, I'm not focusing on fine-tuning the zones because all are gone anyway. And Geo Financial Services. This is also daily high liquidity zone. Drop base rally. See, today also, this is also market opened below the zone and then started moving up. So this is also gone before 9:15 candle itself. And look into the next one. Tata Steel actually having two zones. This is the 75 minutes high liquidity zone and this is the daily high liquidity zone. And fine tuned, see, this is also opened with gap down. Further went down, again moved up. Finally, this zone is also completely gone. You would not have planned any trades. And next one, Exide Industries. This is a supply zone, daily high liquidity supply zone. In the previous videos, we already fine-tuned this zone. I explained how we fine-tuned. And this is opened with gap down. We didn't get any trade opportunity today. Definitely short traders would not have got any opportunities because market itself opened with a gap down and moved away from your zones. Next one you see, HDFC Life. This is also, previously we analyzed this zone. We fine-tuned this zone. And moreover, this zone gave a trade on 2nd April. After that, prices were falling today also. Continuation, huge fall. If anybody would have taken a short-term trade or a swing trade in this zone instead of intraday, they would have been a lucky people today. They would have gained a huge profit today. That's why I'm telling who are holding positions in short positions, they are lucky people today. Who are holding long positions, very bad for them today. Because market opened in a gap down. The 3rd April video, the one I referred earlier. That day clearly I told, the biggest risk in holding the positions is because of this gap up and gap downs. Today, 2 days back only, 2 videos back only we discussed. The last Thursday I think, video, HLQ analysis video we discussed. Whatever we discussed, that damage happened today actually. That day, what is that I told you in that video? Especially the GTT orders, taking the entry, execution of your entry, or execution of your profit, or execution of your stop loss. Always they have a risk. The risk is especially when market opens with gap up or gap down. I remember one of our members also asked a question in that video. What is the solution when we have such kind of problems? What is the answer I gave in that for that particular question? There is no solution. We have to live with that limitation. Nobody can do anything. That day is a bad, that's it. That day we get a huge losses, especially even apart from keeping your stop loss, everything. See, all these concepts work in a normal market. But on a day, disaster day, whatever the concepts you learn, everything will go. That risk will be there. This is one of the reasons why the intraday concept has been popular. Why intraday people are going for intraday? Because they don't want to carry these overnight risks. We don't know overnight what is happening. See, today what happened? Forget about whatever the reason it is in the market. I know many of you know market is not good because of these policies, the global decision-making policies, especially the tariffs and all, that will impact. I know some of you might have away from the market for few days because of this. Until they settle down in the market, they don't want to take a trades. But at the same time, such kind of situation, people also get opportunities, especially short traders who wants to carry positions overnight. That is a good day for them. They got a good profits today. See, opportunities will be there, but risk analysis is very, very important. Depending on the overall situation in the global, how we are taking decision. Are you preferring long decisions or short decisions? That makes the difference. But on the other side, intraday traders, they will be doing trading carefully. Why they will be doing carefully? Because when overnight situations, what kind of risks it will give? With gap up and gap down. The gap up and gap down situations will always hurt your trades. So that's why intraday traders, they avoid the morning 9:15 1 minute candle. Because that candle actually carries the whole risk. See, today we didn't place any orders before 9:15. None of our orders are executed. Market opened with gap down. All our zones are gone. None of our trades we executed them because we are avoiding 9:15 candle. See, safely we minimized the risk that is happened in the market. Completely we mitigated the risk. So risk mitigation is also very, very important. That's why as part of risk mitigation plan, we are avoiding morning 9:15 1 minute candle. So that's why none of our trades got executed because we haven't planned yet. Because we avoided 9:15. So before planning itself, we know all our zones are gone. See the next again. This is a 75-minute zone. 75-minute zone. Let me go to 75 minutes time frame. So this is the one. Rally, base, rally. See, market opened with gap down. We have fine-tuned everything. After fine-tuning, some of you may ask, after fine-tuning, how they didn't work. Maybe institutions cancelled all their order flow because they know what is going to happen in the market. They won't simply analyze institutions on technical analysis, right? Technical analysis is a way of identifying where exactly order flows will be there, where their other, competitors' order flows will be there. This is the way one institutions will be thinking. They will use technical analysis, but they will also use the overall market analysis also. Globally, what is happening? What are the economic situations? Maybe they might have cancelled the order flows. Because they cancelled the order flows, see, easily gone. That's why I always tell when anybody asks why these fine-tuned zones are there are easily violated. What is the reason? There could be only two reasons. Reason number one, maybe supply is stronger than the demand. Here maybe the weak demand is there. That is one reason. Reason number two, most genuine reason and applicable reason for today's scenario, institutions might have cancelled all their order flow. That makes sense actually. The second reason makes sense for today's scenario. They might have cancelled because so many order flows are here. They might have removed all. Why they cancelled? Maybe their calculation spot, everything is changed because of the current global positions or global situations. easily passed. And next one is Bank of Baroda. This is stocks near the supply zone. But this is also having a demand zone also. Either side we get opportunities. Supply zone anyway, we didn't get trade today. Yesterday only it gave you a trade from this fine tune. What is the 5 minutes time frame? Yesterday from the fine tuned area, it is a tested. And today with this gap down, if anybody would have gone for this stock yesterday in short-term trading or swing trading, maybe they would have been a lucky people. They would have got a huge profit because of this gap down. See, this gap down is helping the short traders. Gap up will be helping the long traders. At the same time, gap down will be, what is the right word? Gap down, it is like a big hell for the long traders. For long traders, it's like a pathetic situation today for them. See, let us assume, already you have taken a trade in this zone. Yesterday it reached, maybe your calculation said here in this zone you have to go for a long trade. Assume yesterday you took a long position here, the previous trading session. Now you are holding the position. Further up it will go and that way you want to book the profit. But today, where is your stop loss? Somewhere below this zone. Let us assume you kept your stop loss. But today market itself is open here. So where you have to exit your position here. Instead of position exit here, you are exiting your position here. How much loss we would have got? Huge loss. Majority of our capital would have been gone. This is the only biggest risk always we have to handle in the stock market when you are carrying our positions. Of course, these kind of things happens rarely. Not won't happen every time. But that bad day, it will impact all our capital. So this is the problem. This is the only problem when we are carrying the positions. But being a intraday trader, HLQ zone intraday trader, market opened with gap down, that's it. You won't plan any trades in this zone. Because that is the rule we strictly following. Morning 9:15, 1 minute candle, we don't accept our trades. That's it. How that one rule would have saved us, how that one rule would have avoided to go for GTT trades. That is keeping the trades before market starts itself. Okay. This is Bank of Baroda and Torrent Pharma. Torrent Pharma is also stocks near HLQ supply zone. Yesterday it was here and this is already having a fine, tested zone. Anyway, we didn't plan in this zone, but anyway, price did go. But below we have high liquidity demand zone. Stock is moving between both these zones. That means we may take trade opportunities either side. But today market opens with gap down. That means all these order flows gone. So you won't plan any trade in this zone. So that's why today HLQ zones, we didn't get any trades. But we escaped because of these gap down scenarios. We escaped taking trades from the long trades today. Such a bearish day. Maybe today such a bearish. Once market opened, then market started moving. That way Nifty gave you trade opportunity today. See, look into Nifty. Nifty, previously we analyzed the stock. Do you remember? The day, elections declaration day. This is the area we have weekly zone. Somewhere here, some weekly zone is there. This is a pierced zone. This weekly zone is a pierced, which is inside the monthly, currently monthly. And this is the daily zone. This is the origin. This daily zone is the origin for this weekly zone. Inside the weekly, a new daily zone is created somewhere here. See, weekly down. A 75 minutes demand zone within weekly demand zone. Daily PR zone is created within this area. And this is the area strong order flows we identified. Exactly the same area from this lower time frame daily zone as an horizon to the weekly zone. Same situation is replicated here, but instead of weekly, 75 minute zone is created. Instead of daily, inside the daily, a 5 minutes, fine-tuned 5 minute zone is created. Not fine-tuned, 5 minutes lower time frame zone horizon. Let me directly go to the 5 minute zone. The new order flow. These are the PR zone strategies. Combined with lesson 22 concept, lower time frame zone horizon. Let's go to zone 4th and 5th. On the elections declaration day. See, on the elections declaration day, within this weekly zone, here we have a 75 minutes demand zone is created within weekly and daily PR zone. So this is the 75 minute zone. This entire zone. Inside the 75, we have order flow. Previously, this order flow gave very good profit. Today, this order flow is gone. Second order flow is gone. But today, there is a drop-based rally. This is the horizon for this entire 75 minute zone. This is a lesson 22 concept, lower time frame zone horizon, drop-based rally. See, it picked up the orders from this zone, this drop-based rally. And this entire zone formation is done. When it happened? On 5th zone. This is a 4th zone is election declaration day. The next day, all these order flows are created. Previously, we got a very good profit from this zone. Very good. How many points? More than, I think, 1,000 points move. Nifty has given after reaching this zone. And today, this is gone. It is gone with gap down. Anyway, you can't plan a trade because market opened in this zone. What is this zone? This is the lower time frame zone. Drop-based rally is the lower time frame zone, which is the horizon for this entire 75 minute zone. And both these zones are created inside the pierced zone, weekly pierced zone and daily pierced zone. See, this is the daily pierced zone. This daily pierced zone is the horizon for this weekly zone. This is a weekly pierced zone. When it happened, everything happened on 4th June 2024, the elections declaration day. And this one we already analyzed. We have identified both these draws. In our last analysis, we didn't draw this zone. Last analysis. When 4th June, I stopped my analysis up to here. But actually here, this 75 minute zone is also having a drop-based rally. The lower time frame zone as an horizon. Even I am wondering why I stopped here, why I didn't go one step before and did not draw this. Because lesson 22, we know lesson 22 is a very powerful concept. Maybe, okay, anyway, whatever the reason it is, on 14th January, we analyzed this monthly zone. During that analysis, we have drawn both these order flows. This lower time frame zone, somehow I don't know why I ignored, but anyway, it was not there in my chart on the day analysis. The moment I looked into this chart, clearly we have, see, this horizon is there from the daily zone. See, this is the daily, PR's daily, actually, which is the horizon for weekly zone. So the horizon, inside daily horizon, 5 minutes horizon is created now as part of the PR's zone strategies. And inside the weekly zone, this 75 minutes horizon is created. And by bridging both, we have this 5 minutes horizon. What is the meaning of bridging? Bridging this daily zone and weekly zone. This 5 minute zone is there, exactly overlapped in weekly as well as daily pierced zones. So that means institutions first created this order flow. They kept a huge order flows here. Then it picked up from this entire 75 minute zone formation has been completed. At the time these two order flows are created, this is the one gave a very big move in the Nifty. Let's see. Here. This one already we discussed. 4th March. See, Nifty is falling. Finally, 4th March. From here, you see, this entire move is started from there only. Of course, even continuation to this. This is from here, this entire move started. After that, again further moving up. And when it reached the first origin, what was the Nifty value? Nifty is somewhere around 21,960. Let us say 22,000. I'm adding another 40 points extra. Let's say for easy calculations. See, 22,000 we got the entry up to where it reached 23,851. So almost 1800 points move it gave you. Over 1800 points or close to 1900 points move it gave you. What is this order flow? This is a pierced zone strategy order flow. Okay, below there is another pierced zone strategy order flow. Even third one also below pierced zone strategy order flow. But this third order flow, the bottom one, is not only acting as a pierced zone order flow, that is also acting as a lesson 22 concept. Lower time frame zone horizon to the higher time frame zone. See, exactly today. To bring clarity, let me delete all these violated order flows so that you get clarity. What is really happened? Now we are in the monthly zone. Now I kept only the pierced zone order flows only. See, now it will be very clear for you. Picture. See, this is the first pierced zone order flow. From here, Nifty started moving up and gave you around 1800 or 1900 points move it gave you from here. Now today what happened? Prices opened with gap down. Anyway, this is a tested one. This is gone. And fresh one, the next one. That is also gone, but with gap down. See, market opened below this order flow. Maybe here it might have handled majority of the demand in this zone. That's why it is gone. And below the lower time frame zone horizon. See, market opened and just entered into this zone and gave you. You may ask him, if it is morning 9:15 candle, we might have missed the trade. See, this is morning 9:15 candle. What is the use? We missed the trade. You may say, right? This is the morning 9:15 candle, it gave you the entry. Morning 9:15, we don't take the trades. Anyway, this is gone. Second one is also gone. Third one is active, but it is morning 9:15 candle. Definitely we missed the trade. No, you did not miss the trade. Again, prices reached to this zone. Here it reached. Today at 12:35 it reached. And after that, see, till the closing of the market, how many points move it gave you from here to here? You may say there are up and downs are here. Up and downs will be there in any market. Market won't move like a straight line, right? But this is the zone. But my question is, when market is down by, see, when market reached here, more than 1000 points market is. See, this is at the time of closing 742 points down. But at the time when it reached, more than 1000 points it might have been. First of all, from here to here, how many points move it is there? Look into this candle. What is this particular zone entry? What is the entry? 21,802.60. So let us say, for easy calculation, 21,800. 21,800. Definitely even it went up to 21,795. The low of this candle. 21,796.95 say. So 21,800, definitely your trade 21,800, your trade would have been executed. Okay, till closing hours 22,240, 250, 22,250. Round values it reached actually 21,250 it reached. So 21,800 to 22,250. How many points? 450 points move it gave you today. From here to here, 450 points move it gave you. Who is the reason? The lesson 22 concept. Lower time frame zone origin. But where you used that concept? Inside the pierced zone. 75 minutes pierced zone created inside the pierced weekly zone. Inside the pierced weekly zone. 75 minute zone was created. Inside the pierced daily zone, the 5 minutes lower time frame zone origin was created. This is the present scenario. What is the older scenario? Before weekly zone and daily zones are pierced, daily zone is the lower time frame zone origin for the weekly zone. So that's why inside daily 5 minute zone was created, lower time frame zone origin. The pierced, inside pierced zone, new order flows. The LTF zone is created. Lesson 22 zone is created. And inside weekly zone, lesson 28 zone is created. Lesson 28 means that strategy related zone. How powerful these zones? But my question is, how many of you really would have dared to take a trade from this zone? How many of us might be having really guts to take a long trade from Nifty? Definitely. 99% of us may not be having guts to take a long trade when price reached more than 1,000 points, See 742 plus it gave you 450 points, right? So 750 plus 450, 1,200 points. When price reached here, Nifty might be showing you minus 1,200 points. When Nifty reached our 5 minutes horizon, inside the pierced zone, the 5 minutes horizon to the 75 minutes horizon. 75 minutes horizon also inside the weekly pierced zone. When Nifty reached this location, overall market is 12,000 points down. When market is 12,000 points down, do you dare to take a long trade? It is a question. If anybody would have taken a long trade today in this horizon, we must appreciate that person. Appreciate that person for trusting his concepts. Not only his daring, of course, we have to appreciate his dare. At the same time, we should appreciate because how much trust he is having on these strategies. See, as a trainer, not only trainer, actually, trainer is not the right word. As a designer, I am the one designed these pierced zone and lesson 22 lower time frame horizon concepts. Both are new strategies. As a designer, I know the power of these concepts because I am the one developed. Next, I played the trainer role and I explained you these concepts. Now, as a learner, how much trust you are having on these concepts, that is very, very important. See, today it gave you from here, it gave you 450 points move. Who knows, maybe market may further continue up from here tomorrow. Anything will happen. Maybe it may go down or it may go up. But previously, you see, when it reached this pierced zone strategy, market gave you the first one. It gave you See, from here, from the first one, it gave you 1800 points or 1900 points move from here to here. Close to 1900 points move it gave you. But now, how many points it is going to give? We don't know. We can't tell anything. Maybe tomorrow again it will further come down and this zone might be violated. Market will go further down. That possibility is there. Another possibility, again rally will continue from here. That possibility is there. But at least intraday, it gave you 450 points move from here. It gave you a test. Prices moved, came down, again moved up, further moved up, further moved up, further moved up. And at the time of closing, it gave you, before closing, it gave you 450 points move. I know some of you might have exited here. Some of you might have exited here in case if really we have taken a trade. Or some of you might have exited here, or some of you still holding the positions. Anything can happen, right? It's all depending on our... First of all, many of us would not have taken a trade here. Maybe reasons, this is a new concept, still you are studying, still building confidence on such kind of concepts. Do you remember last 8 months, 6 or 8 months, how many times lower time frame zone horizon concepts gave you the profits? Lower time frame zone as an horizon to the higher time frame zone. What is the lower time frame zone? This 5-minute zone. What is the higher time frame zone? This entire 75-minute zone. This is the one. This drop base rally is the lower time frame zone. This 75-minute zone is the higher time frame zone. Lower time frame zone as an horizon to the higher time frame zone. Drop base rally, prices moved and came down and sharply again moved. Same thing happened today. Today this lower time frame zone only stopped Nifty's fall. Who is the one saved Nifty fall means this lower time frame zone we have to tell. And where you identified this lower time frame zone? Inside the pierced zone, daily pierced zone. And that daily pierced zone is again horizon. The daily pierced zone is again horizon to this weekly zone. Inside the weekly pierced zone, who is there? The newly created 75-minute zone is there. And that newly created 75-minute zone only handled Nifty all these days by pushing the market. See, that is only that 75-minute zone. The 75 is having a fine-tuned 5-minute zone. That is the one pushed. The newly created order flow. See, this horizon is also newly created order flow inside a pierced zone, but acting as a horizon to the newly created 75-minute zone. Ultimately, you have to focus. These are the order flows from the pierced zones. The zones pierced on 4th June 2024. That is on the elections declaration day. That day institutions created the new order flows. See, till all the new order flows, another point you have to observe here. Institutions, they didn't not only created. This is a very, very important point. Everybody please listen. You understand institution psychology, first of all. Understanding institution psychology is important. If you are able to understand institution psychology, you will become a very good trader in the coming days. Okay, listen now. I am telling the point. Please listen, please listen. Institutions not only created a new order flows inside the pierced zone. What is that they did? They make sure all the newly created order flows are executed. See? Here, first time their newly created order flow is executed. Why they created second one? In case any selling pressure is here, then the order flow in this area will push the market up. But actually, the first one itself handled the supply. This one itself is the created. Again, below the second one, they created the third one. Why they created? In case if the second one does not handle due to any reason, third one will handle. Because the first one will consume most of the supply, and the second one, the third one, second one will consume most of the supply, and then the third one will push the market. That is what happened today. See here, market opened here, below. Before opening, it consumed, maybe handled all the supply. Whatever the supply, huge supply, that entire supply is handled in this zone, and the remaining from this zone pushed the market up. Definitely, while pushing up, they would have added a new order flow again. See, next time again reached, see here, just entered into the zone and started moving up. It gave you 450 points before the candle closes. This is the beauty of pierced zone strategies and lesson 22 concept, lower time frame zone horizon. Actually today, both these new strategies together gave you the profit today. Today they saved the Nifty fall. But at the same time, institutions' job is completed here. What is their job? The newly created order flows, they are executed. And the third order flow, lower time frame zone horizon, whether they created for short-term point of view or further they push the market up, that we will be seeing in the coming days only. But previously we have seen the top one gave you 1800 points or 1900 points move. This time the lower time frame horizon, how much move it will give, that we have to see. But intraday point of view gave you good profit today. And the opportunity, 915 opportunity you missed, but still second opportunity, again we got at 1230 candle. Isn't it beautiful? How beautifully institutions executed? That's why I am saying understanding institution psychology is very important to become good traders. It's not understanding retail trader psychology. You should try to understand institutional psychology. Because when some order flows are created, some way institutions will make sure prices will be reaching to that level. Okay, today they got a reason. The reason is the overall tariffs are increased, because of that market is going down. Whatever the reasons. Reasons could be anything. But finally, whatever institutions thought at the time of creating the zone, they achieved. Their order flows are executed. Today supply, how strong the supply. 1200 points market is down at some point of time. From 1200 points, they recovered 450 points today. Are they going to recover the remaining points in the coming days? Let us see. Because tomorrow plays a critical role. Tomorrow. So this is how you should understand the pierced zones and the lesson 22 lower time frame zone horizon. That's why always I am telling you people, focus more on these strategies. They are the new strategies. Many times they give you good profits. I'm not saying always they give you. I'm not saying 100%. No concept works 100%. At least 70% these concepts will have good success. Lower time frame zone horizon, even more than 80% we have seen success. So this is about today's HLQ zone analysis. Hope you got better learning from this Nifty chart. And also you might have realized how dangerous this gap up and gap downs, and how it will hurt some of our profit margins, especially for short-term traders or swing traders. And how avoiding the 915 candle is saving the intraday traders. That is also another important point you should understand from today's discussion. So this is about today's HLQ zone analysis video. Let's all meet again in our next video. Thank you.